Let's build a better world for investing. Let's
Hello,
build
good
a better
afternoon,
world for
everyone.
investing. Let's build a better world for investing.
Hi, good afternoon, everyone. Welcome to the Investor Series Securitized Assets webinar. Thank you so much for being here today with us. My name is Nicolene Anacosta, CFA Charter Holder and Associate Investment Officer of the Asian Development Bank, and I am your host for today's online event. Before we start, we would like to take this opportunity to recognize our annual corporate sponsors for the event. So our platinum sponsor is Sea Oil Philippines Incorporated. Silver sponsors include BDO Capital, Coco Life Asset Management Company Incorporated, and FTI Consulting Philippines Incorporated. And for our bronze sponsors, AP Securities Incorporated, DVP Daiwa Capital Markets Philippines, and Papa Securities Corporation. Our event partners for today are FMAP, MART, and Share Philippines. So to formally welcome us all, may we please have the President and Chairman of CFA Society Philippines Incorporated, Dr. Robert Ramos, CFA, Kaya, and CIPM.
Thank you, Nicolene. So good afternoon to everybody. I truly love these opportunities to learn and understand new things better. I always say that even during the most trying of times, every individual can find several and multiple ways to improve. Securitization has always been a favorite topic of mine, and I'm very interested to hear what our esteemed speaker has to share. I truly appreciate technology for making the sharing of information so easy across the distance and the current traffic. I would also like to thank Ms. Fabula, our gracious speaker, for sharing her knowledge. And I'd like to thank all of you for sharing your time and attending this webinar. Thank you. Back to you, Nicolene.
Thank you so much, Dr. Ramos, for the warm welcome. Again, everyone, welcome to the webinar. This webinar is brought to you by CFA Society Philippines. So joining us today to talk about the securitized assets is the Vice President, Securitization Group Manager of National Home Mortgage Finance Corporation. She is a certified public accountant and career executive service officer. She has been working at NHMFC for 40 years with various experiences in accounting, treasury, finance, and securitization. She was involved in significant activities of the corporation, such as the securitization of assets under Bahay Bonds 1, Bahay Bonds 2, Balay Bonds 1, Balay Bonds 2, and the ongoing Balay Shelter Compliance ABS. Without further ado, may we call on Ms. Maria Luisa M. Fabula.
Thank you, Ms. Acosta, for the introduction, and good afternoon to all the viewers. Thank you for the CFA Society of the Philippines, and I'd also like to greet our former president, Felix Berto Bustos, who's here also. And for the starting point, Princess, can we share now the presentation? So next, please. So the outline will be the introduction of NHMFC, definition of securitization, securitization process, characteristics of an asset pool, things to consider for the asset, and advantages and disadvantages of securitization, the risk mitigations, bond issuances, and the access of investors to these products. Next, please. So before I talk on the securitization of assets, let me first introduce our agency. We are the National Home Mortgage Finance Corporation, created under Presidential Decree number 1267 on December 21, 1977, with the mandate of developing and providing for a secondary home mortgage market charged with the development of a system that will attract private institutional funds into long-term housing mortgages. NHMFC is the secondary mortgage institution of the government and is a member of the organization of the Asian Secondary Mortgage Market Association, or ASMA, with members like Malaysia, Japan, Kazakhstan, Korea, Mongolia, Pakistan, Indonesia, and Thailand. It is also a member of the International Secondary Mortgage Market Association, or ISMA. The organizations are the organ of housing finance. They play a crucial role in promoting home ownership and providing avenues for affordable housing and lower financing costs, and have helped increase the variety of innovative financial products in the debt capital market. Next, please. As a secondary mortgage institution, NHMFC introduced its flagship programs in creating its asset pool for securitization. One is the HLRPP1, or the purchase of originated economic low-cost housing receivables, or the HOME program. The program is a housing finance program which aims to purchase quality and valid housing loan receivables originated by banks, housing developers, cooperatives, and other institutions. Our next program is the HLRPP2, or the Socialized Housing Loan Takeout of Receivables, or what we call shelter also. The program aims to bridge the gap of the country's socialized housing backlog by offering liquidity facility to originators engaged in socialized housing with affordable loan facility to low-income home buyers. And then last is the Balay Verde, which is our HLRPP4. It is a platform for the provision of liquidity facility to any public or private housing loan originators who construct, retrofit, and finance any green certified residential buildings or housing units to serve as the underlying collaterals that are eligible for securitization. The Housing Loan Receivables Purchase Program is a vehicle to implement the securitization program of NHMFC. It helps in the production of assets and create fresh funds through securitization. This also enables NHMFC to purchase new housing loan receivables and liquefy the real estate housing developers, resulting in the reduction of housing backlog. Next, please. So under the Securitization Act of 2004, securitization is a process in which assets are sold on a without recourse basis by the seller to a special purpose entity, and the issuance of asset-backed securities by the SPE, which depend for their payment on the cash flow from the assets so sold in accordance with the plan. In the definition, it made mention of assets. You need a specific pool of assets for securitization. These assets are sold on a without recourse basis, meaning that when the assets are sold, the SPE would not go after the seller since the assets are conveyed on a true sale principle. For the SPE to pay the seller, the SPE will issue the asset-backed securities to the investors, and the proceeds from the sale will be used to pay the seller for the assets sold. The investors, in turn, will be paid from the cash flow coming from the assets. This is what we call the amortization collections from the borrowers. The whole process is in accordance with the plan, which is approved by the regulators. And this plan is the securitization plan, which is evaluated by the Securities and Exchange Commission. Next, please. Now let me show you where the NHMFC gets its assets and how it creates its asset pool. Our assets are mainly housing receivables, and we will be using the housing receivables as an example in the securitization process. One is the housing developers or contractors or builders produces housing units. This is what we call the primary mortgage market. The housing units are then offered and sold to home buyers. The deal begins with an agreement between a lender and a borrower as to the amount borrowed, interest rate paid, collateral to secure the loan and loan maturity. Through the housing units, the originator is able to generate housing receivables, which are called the primary lenders or market. Next step, in order to create an asset pool, NHMFC as a secondary mortgage institution buys the housing loan portfolio from the originators through its housing loan receivables purchase program, which I mentioned earlier. Next step is NHMFC selects accounts that will qualify for securitization. Criteria is set for an account to be included in the asset pool. Structuring of the asset and setting up credit enhancements are done during this period with the help of third parties to conduct due diligence, preparation of transaction documents, securing credit rating, and endorsement or approval of the plan from the regulators. Next. Once approved, NHMFC sells the pool of assets to a special purpose vehicle. This may be a special purpose trust or a special purpose entity in which in turn issues the asset-backed securities and sell them to the investors through the capital market. The borrower's obligation is then sold to a trust along with a variety of similar loans, creating the securitized product. The SPV, or the special purpose vehicle, remits the proceeds of the ABS issuance to NHMFC as payment for the sold assets. The fresh funds is then used by NHMFC to buy more housing receivables and liquefy the originators or developers. During the term of the ABS, the cash flow from the asset pool is used to make payment of principal and interest on coupon to investors as well as to the service providers. Next, please. So we have here the characteristics of an asset pool. One of the characteristics of an asset pool is that they must have predictable cash flow. Some examples of these are residential real estate loans, commercial real estate loans, auto loans and leases, equipment loans and leases, and student loans. Another is that the asset pool that is expected to generate future cash flows can be securitized. Examples of these are electricity bill receivables, net telephone payments, airline ticket receivables, water bill receivables. Another characteristic is that the assets must be homogeneous in character. Example of this is the residential housing loan receivables and those mentioned earlier. Things to consider for the asset pool. Following certain criteria provides a better selection of accounts for the asset pool. One is seasoning of the accounts, which refers to the number of months or years the account has been paying from the time it has been taken out. Next is the status of accounts, indicates if the account is current in its payment or has incurred continuous delay in its payments. To assess the future risk attached to a particular pool of receivables, it is important to gather historical information relating to the performance of the assets. Then we have the loan-to-value ratio, refers to the comparison of the amount of the mortgage with the appraised value of the property. The higher the down payment, the lower the loan-to-value ratio. An LTV of 80% or less is ideal. Lenders are taking on less of a risk. High ratio loans have a higher level of lending risk than conventional loans due to the amount of down payment. Next is the term of the loan, simply means that the duration of the loan applied or by the borrower. This is also used in determining the terms of the ABS issuance. Whereas in the government, the borrower can avail of up to 30 years of the loan. And then we have the interest rate, refers to the rate of the loan given to the mortgage loan of the borrower. Then we have the amount of loan, refers to the amount of loan given to the mortgage loan of the borrower. Next is we have the database of the asset pool. A good database can provide all the needed information for the criteria. Stratification of the data can provide analysis on how the issuance will be structured. As to how many years or term of the issuance, the coupon rate, the amount of the issuance, and the tranching of the asset-backed securities. Securitization demands high levels of data transparency and requires robust system. This enhances the overall monitoring and control of asset portfolios. Then we have the completeness of the mortgage documents for the third-party due diligence. It is also a factor in doing securitization because third parties will conduct due diligence on the asset pool as well as to the loan documents on the legality of the transfer to an SPV or special purpose vehicle via true sale. Some of the participants are the arranger, underwriter, the portfolio auditor, legal and tax counsel, special purpose trust, rating agency, trustee, etc. There may be other third parties in the issuance. Next is determining your target investors. This will help in structuring the ABS issuance, whether you be offering it to a retail investor, institutional investors, or selected investors. You must also check the appetite of the investors in the market. And then we have the approval. Of course, we have the approval endorsement by regulators because we cannot issue an ABS issuance unless it is approved, especially by the Securities and Exchange Commissions. Now we have a tranching a pool of assets. As an example of tranching a pool of assets, shown here is the first bar indicating the universal pool of assets. From the total pool, the accounts are selected to comprise the eligible assets. So a portion of the total pool are ineligible. The second bar, yes, represents the remaining assets eligible for securitization. Due to the selection process made, the assets will then be structured and packaged. The third bar indicates that from the eligible assets, they are tranched into classes such as the senior ABS, senior asset-backed securities, and the subordinated asset-backed securities. So we have there the A and B. Each tranche is separate and distinct from the other tranches, and each has a different level of credit protection or risk exposure. Typically, the junior classes only start, the junior classes refers to the subordinated loans. It start receiving principal repayment after the more senior classes have been repaid in full. If the underlying asset pool becomes insufficient to make payments on the securities, the loss is absorbed first by the subordinated tranches. Next, Princess. So we have here the advantages of securitization. The originator derives maximum benefit from securitization since the purpose is to get the black funds released to take up other alluring opportunities. One is unblocks capital and diversify funding sources. Through securitization, the originator can recover the amount lent much earlier than the prescribed period and has alternative means of raising funds. Example of these are the housing receivables, which can reach up to 30 years before the originator can actually be paid. Then we have the enhances liquidity. The illiquid assets, such as the receivables on loans with the institution, are converted into liquid assets. Housing receivables can be turned into fresh funds immediately and can be used to fund more purchases. It also can be used to reduce outstanding debt with higher interest costs to provide other capital needs. Risk management. The financial institution lending the fund can transfer the risk of bad debts by securitizing its receivables. Risk is distributed or shared with the investors. Then we have the liquidity management. Tenor mismatch due to long-term assets funded by short-term liabilities can be rectified by securitization as long-term assets are converted into cash. Securitization is a tool of asset liability management. Then it can be a gateway to international capital markets. Private companies get access to wider capital markets, both domestic and international. Next is the increased capacity for origination of new receivables. This frees up capacity for new asset origination. New receivables can be purchased from proceeds of the issuance. Then we have the off-balance sheet funding. For accounting purposes, securitization is treated as a sale of assets and not as financing. Therefore, the originator does not record the transaction as a liability on its balance sheet. Such off-balance sheet raise funds without increasing the originator's debt equity ratio. Now for the advantages to the investors. The investors' aim is to accelerate the return on investment. First, we have the quality investment. The purchase of mortgage-backed securities and asset-backed securities are considered to be a wise investment option due to their feasibility and reliability. Then we have the less credit risk. The securitized assets have higher credit worthiness since these are treated separately from their parent entity. The assets in the special purpose vehicle are protected. Then we have better returns. Securitization is a means of making superior return on their investment. However, it depends more on the investor's risk-taking ability. Yields of asset-backed securities or mortgage-backed securities are higher than those of other debt instruments. Then we have the diversified portfolio. The investor can attain a well-diversified portfolio, including the securitized bonds, since these are very different from other instruments. Then we have benefits small investors. The investors having minimal capital for investment can also make profit out of securitized ABS. Example of this, when we issued the retail issuance in 2012, we have small players in there. We have small investors for an amount of 5,000. The small investor can already invest and be assured of the return on their investment. Then we have the safety features of the securitization issuance. It offers investors a diversification of risk since the exposure is to a pool of assets. Most issuances are highly rated by independent credit rating agencies and have credit support built into the transactions. Investors get the benefit of the payment structure closely monitored by an independent trustee, which may not always be the case of a traditional debt instruments. Now we go to the disadvantages of securitization. For the disadvantages of securitization, we have lack of transparency. The SPV may not disclose the complete information about the assets included in a securitized bond to investors. Then complex to handle. The whole process of securitization is quite complicated involving multiple parties. Also, the assets need to be blended wisely. The process can become even more complicated when there is significant government intervention involved, perhaps in loans that have social or political implications. And it is quite expensive when compared to a flotation. The cost of a securitized bond is usually high, including underwriting, legal, administration, and rating charges, and upfront costs of completing the securitization. Investor bears risk. Of course, the non-payment of debts by the borrower would ultimately end up as a loss to the investors. The investor is then the sole risk bearer in the process. Then we have the loss from prepayment. If the borrower pays off the sum earlier than the defined period, the investors will not take superior gains on their investment value. Some of the sources of risk are the prepayment, delayed payment, losses, mismatch in in and payout of schedule, interest rate risk, exchange rate risk, and risk on investment. So we have here now the categories of potential risk. We have the credit risk. Before I go to there is the securitization transaction is very different from conventional lending. In conventional lending, a lender advances loan to a borrower and receives principal payment and interest payment over time. In securitization, the lender sells the right to receive future payments from the borrower to a third party and obtains consideration for it much earlier than the actual maturity of the original loan. Investors in securitization transactions encounter risks quite different from those involved in conventional lending. So we have here first the categories of risk. The credit risk refers to non-payment by underlying borrowers in the pool of loans because of the inability or unwillingness to pay. Analysis of the nature of underlying asset class, robustness of the origination process, as performance of the originator's overall portfolio, and pool characteristics will provide pertinent insights into the credit risk associated with the underlying borrowers. Then we have the counterparty risk arises on account of non-performance of counterparties involved in the transaction. The key counterparties to be analyzed are the servicer and the designated bank and the swap counterparties. Then we have the legal risk. Legal risk arises if the originator goes bankrupt and there is a possibility that the bankruptcy court may attach the securitized receivables and decide that the full cash flow should not be specifically earmarked to the investors in the securitization transaction. To assess the risk, a study on the relevant documents are made and requires the originator to furnish an independent legal opinion addressing the relevant issues and uncertainties associated with the transaction. A detailed analysis of the legal documents to assess whether there is a true sale of the securitized assets and whether these assets are bankruptcy removed from the originator should be made. Some of these are the seller is the legal, absolute, and beneficial owner of each residential loan and has good and valid title and rights to and benefit and interest in each residential loan. And there must be no adverse claim or any pending or threatened litigation. Then we have the market risk. Arises on account of factors external to securitization transaction, such as repayment of loans, movement in interest rates, and macroeconomic factors. Incorporating this risk in the analysis by applying stress levels commensurate with the transaction structure should also be made. Then we have the risk mitigations. Risk mitigations, it provides third-party investors with clearly rated investments that pay according to the risk that they are willing to shoulder. Under Section 43 of the Securitization Law, no asset-backed securities shall be issued unless such ABS has been rated by a duly accredited rating agency. Rating agencies perform a critical role in a structured finance, evaluating the credit quality of the transactions. So there are four major areas that is being evaluated by the rating agency. One is the quality of the assets being sold, abilities and strength of the originator, servicer of the assets, soundness of the transactions, overall structure, and the quality of credit support. Next is the proper oversight and expertise. These risks can be carefully managed that they are reduced to absolute minimum. So there are different parties involved who conduct due diligence prior to the issuance of the securities. Service providers such as the trustee, paying agent, custodian, servicer, and annual monitoring of the rating agency and other parties are in place until the end of the term of the notes. Next is the tranches. So I have shown the tranching of the asset pool. The new securitized financial instrument is divided into different sections called tranches. The tranches consist of the individual assets grouped by various factors such as the type of loans, their maturity, their interest rates, the amount of remaining principal, and as a result of each tranche carries different degrees of risk and other different yields. Higher levels of risk correlate to higher interest rate. The less qualified borrowers of the underlying loans are charged, and the higher the risk, the higher the potential rate of return. Then we have the securitization plan is approved by the Securities and Exchange Commission prior to issuance. It also includes, aside from the approval of the SEC, it also includes endorsement or clearances from the BSP, the DOF, BIR, the Department of Housing and Housing Development, and other regulators. Next is then we also have the provision of credit enhancements. So provision of credit enhancements to lower credit risk of securities within the pool of assets being sold to investors. So we have, I mentioned four credit enhancements that is usually used in a securitization issuance. First, we have the excess spread. It is net interest that is left over after all expenses are covered with an asset-backed security. This type of extra interest can be deposited in a separate account to provide extra assurances on investment. The lender will often collect extra money on the spread so that they can make up for potential missed payments in the future. This excess spread enhancement will be applied to all tranches of a deal. Then we have the reserve account. The issuer agrees to put aside a small percentage of the market value of the deal to serve as the reserve account. These assets would be used to support the outstanding tranches of the deal should any disruption in cash flows impact the trust's ability to pay for its monthly obligations. Then we have the over-collateralization. It is the process by which the lender constructs the offered bonds such that they will be worth less than the actual value of the pledged assets acting as collateral. Then we have subordination. This is a popular type of internal credit support in the senior subordinated structure. It is characterized by a senior class A of securities and one or more subordinated classes that function as protective layers for the A tranche. So the A tranche, which is the secure note, is protected by the subordinated notes. If a loan in the pool of defaults, any loss incurred is absorbed by the subordinated securities first. The A tranche is unaffected unless losses exceed the amount of the subordinated tranches. The senior securities are the portion of the ABS issue that has the most credit protection, while the lower quality subordinated classes receive a lower rating or are unrated. So in the example, in the tranching of the asset pool, we have the senior A, and then we have the class B. The class A is the senior note, and the class B is the subordinated notes. Next, please. So let me show you the bond issuances made by NHMFC. The HLRP programs have helped NHMFC in the production of assets and create fresh funds through securitization. This also enabled NHMFC to purchase new housing receivables and liquefy the real estate housing developers, resulting in the reduction of housing backlog. In 2009, NHMFC issued its maiden issuance, or this is what we call the Bahay Bonds 1 or BB1, which was offered to institutional investors. It took place at the height of the global economic crisis that was brought about by the subprime mortgages. It was awarded by the Asset ASEAN Award as the best securitization of the year in 2009. In 2012, NHMFC issued the second of its Bahay Bond series, which we call BB2, and was the first ever retail bond issuance and first listed asset-backed security. It gained the Innovative Corporate Bond Issue of the Year by the Philippine Billing System Holdings Corporation and subsidiaries, or PDS Group. This issuance targeted the retail investors, which provided safe alternative investment with better returns. So in 2012, when we issued these retail investors, this is what I mentioned earlier, that we have retail investors who can purchase the securities in an amount of 5,000 pesos. And what we did here is that the investors can purchase the securities in the bank by applying, and then applying for the purchase of the securities, and they get to pay the amount of 5,000 pesos in the bank. We have Land Bank as our arranger before, and it made use of its network. And then the retail investors are not saddled by the payment of their interest on the coupon. So what we did was that they open an account. The interest income that would be paid to them would be credited to their ATM. So it's really very easy for the investor to take advantage of this process because it's not hassle and very comfortable for the investor, because small players in the market, they are afraid that they could not go into this type of transaction issuance. And this paved the way for these retail investors to have alternative investment opportunity. And in this issuance, we have we raffled off 3 houses for the investors who would stay and would not sell their investment for that period of 5 years. So they get a chance. They have investment opportunities that is safe. They have interest on their investment, and they get the chance to win a house and lot. So we raffled off for that, and then And it's very a good experience for us because the three borrowers, the three investors who won the raffle are really very saddled with the due to typhoon due to the typhoon Yolanda. One of that was the winner was from Armagh, so it really gave them a better way of putting up again a new business and a new way of life again because they are settled with this typhoon. So we were really very happy that these investors were the ones that should be given this opportunity. And then in 2019, we made again another bond issue one, which we named Balay Bonds 1, which was issued to institutional investors. And a follow-up issuance was made in 2020, which we call Balay Bonds 2, targeting also institutional investors. So 2019 and 2020, we were able to issue, but in 2009 up to 2012, that was a very long period before we were able to issue again. And then in 2021, we were not able to issue because of the pandemic. And then we have this upcoming issuance, which is the Bala Shelter Compliance ABS. This is already with the Securities and Exchange Commission waiting for the approval. This is another type of financing transaction in which target investors are real estate developers. And these developers need compliance to get their license to sell. And the approval, and it is another type of issuance wherein the developers when the developers purchase the ABS, they would be simply given the full compliance for their projects, such that the developers can be provided the full or can be given the full compliance for their projects or future projects. So this is in line with the compliance to the Balanced Housing Development Program, giving them alternative compliance suited to their needs. So next. Then we have the access to the target investors for the issuance. We have the following activities during the offering period to promote our issuance to investors. We have roadshows for the investors. Usually we do 3 main roadshows in different parts of the country and pocket roadshows in the NCR. And then we also have press releases. NHMC makes announcement to the newspapers. And then we have also radio announcements. With the help of our arranger, they provide their radio time slot to advertise our offering. Then we have also the networks or facilities of the arranger for their bank branches nationwide. In order for the investors to easily access the purchase of the securities, we make use of the facilities of our arranger with its bank branches nationwide. Then the investor could purchase directly from the branches. Then we also have the NHMC, our website. We make use of this website to announce where to purchase the securities. So there are also challenges facing for the securitization issuance. One is that the assets, qualifying assets may not be enough to provide a substantial size for the issuance. Securitization may restrict the ability to raise money in the future if there are no available assets. For the mortgage documents of the assets, the loan documents pertaining to each account included in the asset pool for the issuance must be readily complete and available. And then we also have the third parties. Engagement of many third parties, so it's a complex transaction, thereby incurring high transaction costs, upfront costs, and due diligence that will be conducted by these parties. Then we also have regulators. The issuance requires endorsement of approval or endorsement or approval of regulators such as the Securities and Exchange Commission. We also get clearances from the Bangko Sentral of the Philippines, and then we also get clearances from the or endorsement from the Department of Finance, and we also need the revenue issuances of BIR to get a tax incentive on this, and then and another is that we have also clearances from the Department of Housing and or the SUD, and there may be issues or concerns on the approval. And then we also have the annual monitoring of the rating agency. So every year until the issuance ends its term, the annual monitoring of the rating agency will be there. So it is a complex transaction because of the multiple parties involved. So for my conclusion, when a company needs to raise funds to sustain or improve its programs and has no available funds, an alternative solution is to make use of its existing asset that has predictable cash flows and liquefy these assets by converting them into marketable securities that are sold to investors. This process is securitization, which can provide immediate funding. It's a way of distributing the risk, and it's an off-balance sheet transaction. Investors can get a better return on their investments. The transfer of the asset is based on a true sale principle, and the claim is on the assets and not on the entity. The assets are legally isolated from the company's bankruptcy estate, and the transactions are structured to reflect a lower risk profile than lending directly to the company. Securitization can also be an indicator of the performance of our asset pool due to the data gathering. After the term of the asset-backed securities issuance, the seller can actually regain the assets back to its custody and can be used again for another issuance. With this, I thank you. Thank you for listening.
Thank you so much, Ms. Favela, for the very informative presentation. So before we proceed on the Q&A session, may we please call on the former president of CFA Society Philippines and National Home Mortgage Finance Corporation, Dr. Felix Berto Bustos, CFA, to join Ms. Favela to answer the questions. Please write your comments or questions to the speaker in the public chat space.
Hi, good afternoon. Like I said earlier, I'm here to provide perhaps more historical background. Luisa is the more current one because I left NHMFC some time ago. So I am willing to answer anything that has an historical context. Luisa will be able to answer more of the current issues.
Thank you for being here, sir.
Welcome.
Sir, there is a question here in the chat box. What would you say would be the most difficult aspect of valuing the securities? Anything specific to the Philippines?
Okay, again, historical. I will look at the issue during my time. I wanted to make sure that the values of the securitized assets were real time. So perhaps Luisa forgot to mention, the retail mortgage-backed securities that we issued were not only the first retail, they were also the first listed ones. So in effect, there is a real-time value, meaning there's always a willing buyer and a willing seller, and you just have to look at the newspaper. And we made sure our partner, Land Bank, every branch had an accredited dealer. So if you were a buyer of one of our bonds and the proceeds were being deposited to your account at Land Bank and you had an emergency, somebody got sick or there's a fiesta coming and you wanted to sell your bonds, then you could go to look at the newspaper, or Land Bank also had a quick link that will tell you what the PDS rate would be, and they would sell it for you. Okay, although and as Luisa said, we were trying to discourage this by telling those that kept the bonds every anniversary, every December 21, 3 years, there would be a raffle and you could win a house. But if you needed the money, we also talked to Land Bank, and they were also willing to lend against the principal of the bonds at their prime rate. So the retail investor not only had a good return, they could sell at real time, at real value, and they could also borrow against the bond. So that's the way we set the valuation in the buy bonds too, by listing it so that the value is what a willing buyer would be willing to pay to a willing seller.
Sir, aside from this, when we issued bahay bonds to this asset is composed of the socialized and low-cost housing assets, and we have this incentive that they will not be subject to income tax on the holdings of the investors. There is another question here, sir. In line with the ones mentioned in the presentation, what do you think is the biggest impediment to having more securitization deals? How can this be overcome so we can grow the securitization market?
Would you like me to answer, Luisa? Well, I've always, when I was the president, I was invited. I put the 3 obstacles using the first 3 letters of my name, FEL. I'm Felix FEL. Okay, the first is funding. Okay, unlike my former employers, PNB and Land Bank, when NHMFC restructured some time ago because all that happened, the crisis, Asian crisis, they were not recapitalized. So when I took over, they were actually in a negative equity position. So in effect, there was not too much funding to buy assets, to buy loans. So if you don't have loans, there's nothing to securitize. So that was what the funding. That's a. The second is extraction rate. What does this mean? Even if you're able to securitize, for example, buy bonds 2 was a 2 billion issuance, but the net proceeds was only 1.4. So the extraction rate, which we call it, is 70%. Why is that? Because as pointed out by Luisa, there's a lot of steps because the Securitization Act was approved by the Philippine Congress. I think Senator Recto was one of the main proponents. Right after the subprime crisis in the US. So they wanted to put a lot of protection for investors. So there's so many steps. Portfolio auditor, rating agencies, legal review, tax review, and this have costs. So ang nangyayari, even though theoretically you can keep doing this, meaning issue a 2 billion, buy loans for 2 billion, and then after the issuance, then you can buy more loans again. But because of all these steps, protection to investors, the extraction rate is quite low. So if you buy a bond 2, the extraction rate was 70%. Okay, that's the E. Yung L, leveraging, was what that's really, I should have been turnover, but I wanted to use my initials, FEL. So leveraging turnover, you can't, it's not very fast. The mobility, the turnover is very slow because, again, as Luisa pointed out, there are so many steps. And these steps were really set by the law to protect investors. But again, I'm no longer in government, so bato-bato sa langit, tamaan, wag magagalit. It takes time, and they don't do it in parallel. They do it sequentially. So you go to one step, you wait for that, you go to the next step. So by the time you're done, it takes years, months, and therefore it's very difficult. If number one, if you have limited funding, and then limited funding, the net proceeds is low because of the extraction rate, and the turnover is very slow, then obviously it's difficult to keep doing it. Kaya nakakatawa. It's very funny. As Luisa showed you, the ratings were very good. They were oversubscribed 3 times, and we kept getting awards from all sorts of third parties. And yet we were not doing it. Why did we do it yearly? Why did we do it so often? Because at the beginning, if you didn't have so much money, you can't buy. Kasi unlike in other countries, I was the officer of in the Asian secondary markets. I'm familiar with the other countries. In Chagamas, for example, they have a built-in, they call it housing value chain, where there is a feeder, there's a one agency, for example, Pag-ibig, in Indonesia, Bank Tabugan Negara, they will give you the housing loans. You don't have to buy them. And there's a constant flow, so you can keep securitizing. And then Bank Chagamas and the group of companies, they have their own SPT, they have their own rating agency. So it's all done by their own boards. To some extent, again, nakapink ako, so you can say I'm biased. It's very similar to what it used to be the Minister of Human Settlement. All the housing agencies were under one umbrella, the Ministry of Human Settlement. And it's very easy to pass it on to the next. Pag-ibig does the loan, pass it to the Home Guarantee Corporation, who will guarantee, pass it on to NHMC, who will issue the pabahay bonds, etc. Although I was being talked to unofficially, it seems the new administration is planning to look at this. They were looking for a consultant to look at this housing value chain. So maybe yung flow, yung F, yung funding portion will be solved because instead of the HLRPP, yung sinabi ni Luisa na bibili pa, the housing loans will feed into NHMFC. And there's also a bill introduced by Senator Bongo that will increase the capitalization of NHMFC from 5 billion to 50 billion. So they don't only have to rely on housing agencies to give them loans. They will also have funding to buy housing loans from banks. Kasi the banks obviously are interested. Kasi there is a central bank regulation that says if you're a bank, your portfolio can only be 20% housing. So a lot of them are probably at the limit. So as Luisa said, it's off balance sheet yan. So if NHMFC is funding the 50 billion proposed by Senator Bongo, if that gets approved, then they can buy some of the housing loans of the private banks so they can give more loans to their existing clients. So that will probably solve yung first letter, letter F. Funding. Extraction rate, I think because malayo na rin yung subprime crisis. And the loans of NHMC are very basic naman. They don't go, yung kasing nangyari sa subprime crisis sa US, they got securities and they issued securities, hindi na primary. Yung kasi sa atin, as Luisa pointed out, we only securitize primary mortgages. Yung kasing sa US, housing certificate, and then they securitize the housing certificate. So parang house of cards ang nangyari. Patong-patong. I have a separate talk on that and I already gave it. But in essence, masyadong naging complicated, hindi na transparent. So that's why they had all these safeguards built into the Securitization Act. But I suppose since NHMFC is a government corporation naman, and again, it's in a bill that was proposed by, well, who was the congressman then, spokesperson of BP Leni, si Barry Gutierrez, that will say that instead of NHMFC passing through all of these government agencies, at the beginning of the year, parang we'll just get blanket authority. Said, para alam nila, NHMFC will issue what? 5 billion, 10 billion, and we will get back at approval, and then we will just issue it every month. So if that's approved, that bill, I don't know, Senator JB is back, so maybe he will do it. Then the extraction rate, perhaps it will not be 70%, it might be higher, 90%, so the proceeds will be higher. And then again, if you take away all the steps, then the L, the leveraging or the turnover will be faster. So if you solve all of the FL, the turnover will pass. In the US, for example, they do it every week. Parang treasury bills, yung Ginnie Mae, Fannie Mae, Freddie Mac. And then therefore, sa kanila, the amount of housing mortgages, and in most countries, it's about 1/4 of the market. Sa atin, it's 0.05 ata of the market ang securitized, ang mga mortgage-backed security. So I suppose if we really want focus on this, and maybe the former First Lady, the mother of the president, will be interested in getting involved again, maybe they will look at all of these things that are being, hindi naman mga bago to. This is not rocket science. It used to be done before, and it's being done in other countries. We're members of the ASMA and ISMA, as Luisa mentioned, so we're very familiar with how they do it. Dati tinuturuan lang namin yung Mongolia, Kazakhstan. Ngayon, they're issuing billions of pesos, yung mga tinuruan namin. Napag-iwanan na tayo. So this is a good instrument. There are a lot of guidelines to protect the investors, but I think at some point there has to be a balance. Yung protection, but also you want to make sure that there's also enough supply. But if it's a good investment, but you get it what? Once every 7 years, once, and so on and so forth. So it's scarce, ano rin. Hindi rin magiging popular because you don't get it enough. You don't have enough supply. Yung dati nga, yung mga friends ko sabi, hindi kami nabigyan ng bahay bonds too. Because it was three times so over. Ginawa lang namin, we did it like yung IPO nung Petron. We started with the 5,000, nagbigyan nyo 6,000, etc., etc. So yung mga malalaki, hindi na, I think we only got to those that bought up to 60,000 pesos. So it was very popular. There's lots of guidelines, but we need volume. We need to do it often. And I think there has to be a middle ground. We have submitted proposals to the Senate, to Congress, to amend the law to bring it to a more level where there's still protection. But since we're a government agency, if you look yung mga nagsi-CFA exam, if you look at yung mga yield curves, usually the corporates are on top, the governments are in the bottom. Nasa middle yung mga pwede. So theoretically, we're not as risky as corporates, but we're a little bit riskier than the government treasury bonds. So there shouldn't be the same amount of due diligence or oversight. Kasi kung minsan, I have a friend na nabenta yung loan niya, one of the loans. Akala ng mga kapitbahay subdivision, bad debtor siya. Why? Because it was selected by the portfolio auditor, so binisita siya. It was selected by the underwriter, binisita siya. The loan was selected. This is supposedly random by the transaction. So 3 times may pumupunta ron, pinagtatanong, ano ba yan si Luisa? Nagbabayad ba yan? At some point, the due diligence, the transaction review being done, kung malas ka't mapipili yung sobra-sobra na akala tuloy ng mga tao, bad data. When theoretically, napakaganda ng asset mo. As Luisa said, yung good quality lang yung sinisecuritize eh. But kaya lang, because of the due diligence, even though you're good quality, nare-review ka ng once, twice, 3 times kung minsan. So, I think those are the 3 problems. There's not enough funding either in peso or loans to input. The extraction rate is quite low, and you can't do it very fast. The mobility or the leveraging is slow because of the excessive, to my mind, due diligence which was required by the law, which was passed right after the subprime crisis in the US. Sorry for the long answer to the short question.
Sir, this is also a question. Could you also please share more details on the securities rating process for securitized deals? Regarding this, what I can only mention is that what they really need from us, they would ask for the securitization plan, then they would ask for the details of the assets, and they would look at the historical performance of the assets, even more than 5 years. So this is really very hard for us. And aside from that, they also verify the transaction documents.
They request, kasi as Luisa mentioned, there are a lot of other parties involved. They also look for the output of the transaction auditor. We've gotten for Pricewaterhouse and some other. They also look for, as again Luisa mentioned, yung legal review done by the legal counsel. They also look for, even though the Supreme Court has already decided in finality, the issues namin are tax-free as long as the underlying are below 3 million. But yet, they still look for a BIR opinion. So, to me, parang overkill eh. Na yung pag-rate. And then they do this annually. There's an annual review, as Luisa said. So, ang daming trabaho yung pagre-review. Because there's an annual review. The rating agency, they do it. We provide them all the documents. They're the ones that come up with an annual review, AA, and then they review it every year kung namamaintain pa rin based on what happened to the underlying asset.
Another question here is that would an independent rating agency covering the securities help boost volumes and coverage? Every issuance is supposed to be rated by a rating agency. So we only have one rating agency here in the Philippines aside from the CRIS.
No,
The
there's actually 2. I had disclosure, ano?
rating-
Kasi I'm one of the founding directors of the other one. Okay, so when I was with NHMFC, parang delikadesa. Although I resigned before I joined NHMFC. Pero if you look at the kasi, I was one of the founding director, yung CRIS. So during my time, ang ginagamit lang namin the other one. But I think like yung isang DECA, when they issued, but they use China ata. They use CRIS kasi hindi naman kami. So there's actually 2 in the Philippines, but during my time we could not use, because of delicatessa, use the other one because I was one of the founding directors of that other company.
Would foreign banks being involved in the mortgage securitization process help in boosting volumes and coverage?
Again, my personal opinion is at the current level of volume, we still don't. Although, like I said, we're very active in ASMA. Luisa attends every year. They've gone all over Asia na attending this meeting. They're willing to help us. In fact, we were talking about the cross-border issue kung usap na kami sa ADB. But like I said earlier, the volumes are not even sufficient to meet the needs of buyers, investors in the Philippines. what more ano pa, ano pa natin. But our partners, our fellow members of ASMA, as willing to help us. In fact, under the ASEAN, there's a ABMP. I forgot what it means. Theoretically, we should be able to issue bonds in other ASEAN countries. So, I agree. The answer is yes. It will help, but at current volume levels, mukhang hindi pa kailangan. Now, if all those things that I mentioned earlier, yung housing value chain becomes a reality, Senator Bongo's increase in capitalization of 50 billion comes up, and we're able to buy a lot more private loans, or if we follow the Chagamas model, where 80% of the equity of Chagamas are owned by private banks, so private banks will have an interest in selling their housing, in sending their housing loans to NHMFC, then the volume will increase. Then obviously, maganda na yung selling some of this to the other ASEAN countries, lalo na if we issue yung sukuk bonds sa mga Muslim Islamic housing, then maraming market doon sa Malaysia, sa Indonesia in terms of. We were also looking at that, but again, volume din. Shopsy is issuing some housing, but the volume is not sufficient. So there's a critical mass kasi kung masyadong maliit, lugi ka doon sa mga binanggit niya na transaction cost ni Luisa. As he said, it's very expensive. Kung volume mo is so small, the extraction rate becomes very low. So lugi ka in terms of issuing it. So I think the important thing is increasing the volume. Once the volume increases, then we can also focus on Islamic housing. We can focus on, as Luisa mentioned, socialized housing bonds, and so on. We have a lot of things in the pipeline, green bonds, etc. But the problem is always volume. We don't have enough loans being coursed through NHMC, and also it doesn't have enough capital to compete with Pag-ibig and the others that are willing to buy the housing loans of other financial institutions. I don't have my reading glasses, Luisa. Ano to? Meron ba? Mali sa lamig ko.
Wala na po dun sa
Okay.
chat box.
Okay.
Do we have any other questions?
This is my distance glasses.
Do we have any other questions from the audience? Okay, it seems like we don't have any other questions. So again, thank you, Ms. Favela and Dr. Bustos, for your participation in today's talk and for sharing with us what you know about securitized assets. It was a very informative session. To all our participants, please turn your attention to the screen for the QR code of our online evaluation. Please take the time to answer the survey. It will take you